Hey, a lot of folks are wondering what's going on with Tesla stock today, at least at the time of this recording, and who knows, it could be up by the time the market closes because the market has been so maniacal. The market presently is pricing Tesla down 3.2%, and people are wondering why. The first and most logical explanation has to do with this: existing inventory price cuts, but this is not the only explanation, so we'll get through the news here. So first, price cuts obviously lead to the impression that Tesla is going to have lower margin, therefore less profit, and ultimately less margin, lower EPS means a higher valuation for Tesla. Then you get valuation compression, and oopsie doopsie, not only do you attract more short sellers who load in shorts when news like this breaks, but it does hurt some of Tesla's free cash flow. Now, I personally thought we were going to see negative free cash flow in the last quarter. We actually did not, thankfully, knock on wood, and hopefully we don't in this fourth quarter. This fourth quarter is going to be particularly challenging for two reasons. Number one, you've had the highest interest rates in this quarter. If you look at a 10-year treasury chart, you'll see the highest interest rates were in October for essentially the whole year. Now, they've come down since then, but they're only back to really what we saw during Q3. So that means much of Q4 has been exposed to, unfortunately, higher interest rates, which is not great because that directly affects people's ability to afford a new car. So that's not great. Combine that with discounting of existing inventory, and the second issue that I wanted to bring up, so not just the discounting of inventory because of rates, but also the second part, what could be driving the discounting of inventory? See this federal tax credit? It says here the $7,500 tax credit can be redeemed between now and December 31st. That's fantastic, but that means you redeem that on your 2024 tax return, which means, let's say theoretically you buy December 31st, you're going to see that as a tax credit if you actually owe $7,500 in taxes, right? So you have to owe $7,500 in taxes and you have to qualify for the credit. So let's say both of those things are true. You're not going to see that money until probably when you do your taxes. So like somewhere between March and May. And then you actually get, any kind of tax payment, or you make your payment, or if you're on extension, you won't actually see it until October. The downside of that is we actually have a catalyst Jan 1. Jan 1, dealers are going to start being able to give this discount, this tax credit, as a point of sale discount, which means if you just wait a day longer to Jan 1, ironically, you'll actually get that tax credit immediately versus waiting for it. So those are two big catalysts that are hurting here: the interest rates of this Q4 and the fact that you're going to get this rollover. And again, that is the dealer EV tax credit. So you could fact check that if you want to search for it. You'll see articles like this: car buyers can get their EV tax credits upfront at the dealership. Now, it's unclear exactly how, given that that's a dealership, will affect Tesla. Presumably, that'll apply to Tesla as well. But under new guidance, those purchasing electric vehicles or plug-ins that qualify under Treasury hybrids, or Treasury guidelines rather, will be able to start getting these credits starting Jan 1. Jan 1. So it's essentially what we've said here. There's a 27-page guidance on this that breaks down the procedures for dealers or essentially manufacturers selling the vehicle. So we expect Tesla will be eligible for this, which again delays people's desire to buy because, again, rates, and you're incentivized to wait until January. It's holiday time. I don't know how many people are gifting Teslas for the holidays. Budgets are tighter now. People are spending on other things and gifts for their family and such. And so as a result, available cash is a little lower. And so what's happening? Well, the hedge funds are eating it up. Not only are hedge funds eating it up, but the mainstream media, which we'll talk about that in just a moment. Here you go. Tesla's still hedge funds' favorite short stock after heavy losses in October. And so I think what you're finding is every time there's a price cut or any kind of bad news on Tesla, it's very easy for the short sellers to load on the shorts. You can see here the Magnificent Seven have been loved by hedge funds, but there's one notable exception. They love to bet against Tesla. According to Goldman Sachs' latest hedge fund trend report, Tesla remains the most popular position amongst hedge funds as of Halloween, despite the stock having risen more than 90% year to date. But then again, that only does you good if you actually bought the stock January 1st. If you bought it anything before that, you're probably not at a 90% gain right now on Tesla, unless it was quite a while before that. Anyway, beyond that, there is also the Elon factor. So, I'm not here to bag on Elon. I have my criticisms of Elon, but I want to be very clear. I love Elon. I'm inspired by Elon. I think he's great, but I do have my criticisms of him. That's, I think, one of the things that people like to come to my channel for is I'm not afraid to speak my mind, and I'll tell you what I think. I'm not holding back. I'll tell you what I like and what I don't like. And this is a Business Week article, so it's like, very classic, our mainstream news here, right? How Elon spent 3 years falling down a red-pilled rabbit hole. This is gaining a lot of attention right now, and it could be another reason institutional sellers or institutional, fund managers are trying to distance themselves from Tesla. Because it's not just people who might not want to buy a Tesla because they're offended by Elon, but it's also fund managers who have to justify investing in Elon when companies like Lionsgate, Apple, Disney, IBM are cutting their ad spending at the same time as there is this belief that Twitter is very right-wing focused, and potentially some people are now describing it Twitter brain, wherein the Twitter platform actually ends up narrowing your worldview. So I have a comment on that. I've actually kind of been just complaining about Twitter for a while. I use Twitter, don't get me wrong, and it's X. I know that. It's just hard for me to make that switch. So I use X regularly, but I have to go on X, and then I have to balance my usage on X with looking at other sources, because if I only go on X, I will believe we are going into a Great Depression, that Democrats are the greatest fraud ever, and I know half of you listening to this are going to be like, that's right. But I don't believe that. I believe that there are definitely extremist Democrats, just like there are extremist Republicans. But I don't believe the majority of people or voters are terrible people. I think 80% of our country is on relatively the same wavelength. I think 80% of us can sit down for a beer and go, hey, let's talk stocks. Let's, talk business, whatever, right? I don't care if you're a Democrat or Republican. So, but I do find that when you spend time on Twitter, you do generally get, like, you are incentivized basically to engage with content that removes a lot of context. Longer threads, longer context, longer form video does not do well. The average view duration of a Meet Kevin video on YouTube, for example, is like 9 to 10 minutes. The average view duration of a Meet Kevin video on Twitter is like 30 seconds. And that's like scrolling mentality. It's very much like TikTok, right? It's you're scrolling, you watch for a little, get a headline, keep going. So I think sort of a warning to people would be there is a real aspect to Twitter brain. And I'm not saying that's necessarily bad. I like you get some good quick news from Twitter, you get some good quick perspective, but there's definitely a balancing aspect that's required. But anyway, mainstream media is going after Musk for basically his thermonuclear lawsuit against Media Matters. We covered this in detail already, the Media Matters lawsuit. We went through the actual lawsuit by Elon and X against Media Matters. It's worth noting that the lawsuit they filed basically agrees that what Media Matters said was true, which is really bad because the only way you can win a defamation case is if you prove that what the other person said was false. Elon and X allege that, well, they presented manipulated data. Okay, well, that just dropped the odds substantially of success. But there were a lot of attorneys who replied to my analysis, and they're like, Kevin, isn't it a little ironic that Mr. Free Speech is getting upset about somebody pointing out, hey, when we scrolled for 15 hours straight or whatever, we ended up finding a Hitler post next to an Apple ad. Is that not a form of silencing that form of free speech? Which then is similar to the belief that if Elon is just reacting to, individuals who promote sort of red pilling, so to speak, and then Elon blocks people who have a contrarian point of view, then does that narrow Elon's worldview? That's a risk, right? And so I'm not saying that I think Elon is narrow-minded. I'm saying institutions have to defend investing in Elon to other people. And if institutions think he's becoming narrow-minded or only looking at one side or having Twitter brain, then that is a near-term, short-term downside catalyst to the stock. I don't think it matters at all in the long term. The article goes on to talk about this sort of like red pilling. And what I think was interesting is this line here. These interactions boost Elon's standing with the far right, or just the right in general. This was interesting. And create incentives for those accounts to try to get his attention. That I thought was really interesting. Is this idea that, oh, Elon replied. Now you're incentivized to do more things that Elon might like, which kind of gets you down potentially one direction. But anyway, look, in the short term, those are legitimate bad catalysts. In the long term, is my long-term thesis really affected by any of this? No, not at all. I haven't sold a single Tesla share in 2023. We have increased our allocation to Tesla. We went from about 10% cash in the summer, which I wish was 100% cash, but then again, hindsight is 2020. And we allocated that 10% cash to pricing power style stocks. I still hold Tesla as a number one position personally in an actively managed ETF. Big fan. I think long term, all of the short-term mindedness of institutions will end up burning them. But in the short term, the shorts could be right with Q4. Like Q4 is going to be tough. So there are definitely some real headwinds. I think what we need for not having a disaster of a January Q4 earnings call, which will probably be like January 19th or 20th or whatever. We really need rates to fall going into January, and then Elon being like, yo, Q4 was hard, but that was the bottom. That's probably what you're going to need. So yeah, definitely short-term pain ahead. But I think a year from now, we could be in a substantially better place. Substantially better. Kind of like, a year ago, November 22nd, a year, I wonder what our 1 year return is on Tesla right now. 37%, interesting. The stock was $169 a year ago. And of course it fell to $109. I do think there's still a little bit of that short-termness to worry about though. So if you're short term, heads up. Now, another thing that's very interesting is there's been a lot of talk about Toyota's, solid state battery. And I thought this was so interesting. This was a piece published. Who published this? The Drive published this. Look at this snapshot right here. Toyota previously promised to launch its first solid state battery in the mid 2020s. And now has a timeline for manufacturing. Two companies will begin pilot production in 2027, and they'll produce several hundred tons of the new electrolyte needed. And they expect to enter mass production in 2030 to be able to supply over 10,000 vehicles. And they suspect that these batteries will be used in some kind of super high-performance EV car, not like Toyota Corollas. So, in other words, this whole solid-state battery push is probably just Toyota clickbait. Very interesting. But we already believe that. And again, long-run believer in Tesla. Short-term, though, we do have some headwinds. It might end up being a buy-the-dip opportunity. I don't know that today is that buy-the-dip opportunity. I think, you drop to like I don't see us going back to 101. But, you go to like 175 on bad Q1 earnings. Probably buy the dip. That might end up being the local bottom. But there are plenty of reasons, especially the recent discounting and that Jan 1 catalyst is big for short-term bearishness. Anyway, thanks for watching. We'll see you in the next one. Bye.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate an actively managed ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker.